Hello, everybody. My name is Alesh Eisner, and welcome to the Canadian Money Talk, the channel about Canadian investing and personal finance. Please like and subscribe. I record 2 videos per week, so make sure you ring the notification bell to get notified each time one comes out. This is my thoughts on market happenings for the week ending May 19th, 2023. Looking at the market indexes for the week, the TSX is down, mostly on the Canadian CPI inflation read on Tuesday, but the S&P 500, Dow Jones, Russell 2000, and Nasdaq are all up. Gold was down, oil was up to $71 per barrel for the week. The benchmark S&P 500 index, in fact, rose to a 9-month high this week. Looking at Canada, the Canadian Consumer Price Index came in on Tuesday. It was a little mixed, and the TSX sold off. The core CPI was lower than previously and than expected, both month over month for April and year over year. The headline CPI, which includes food and energy prices, was higher than expected and then the previous reading, with gasoline prices higher by 6.3% from the previous month. I don't believe this alone will lead to further interest rate hikes at this point, but it wasn't what we were hoping for, and the TSX did not take it well. Turning to Canadian housing, housing starts in Canada fell 11% from February to March to 213,000 units. Single detached houses fell by 16%, but multifamily increased 11%. This is creating an undersupply of housing and is deemed a housing crisis, with the government regulations being part of the issue and increasing the price. There is an underutilization of land in cities with low density. Canadian real estate activity, however, is rebounding. Sales across Canada are up 11.3% in April. Prices are up 1.6% for April, which is a big gain for only 1 month, but prices are still lower than a year ago in April of 2022. The average housing price in Canada is $716,000, and prices are up $100,000 from the start of the year. This is still down from the February 2022 peak of $816,000, but also up from the July $630,000 bottom. Turning to the United States, Home Depot's earnings report was out early in the week, and it was not great. While the bottom line barely beat Wall Street's expectations, revenue came up short with lower consumer spending. In fact, it was the home improvement retailer's second consecutive revenue miss after previously posting 12 consecutive beats. Home Depot also lowered its same-store sales estimate for the year to a decline of 2% to 5%. Before, it had expected the metric to stay effectively flat. Target's results came in a little better than expected Wednesday morning, even as shoppers pare back their spending on discretionary items and buy more essentials like groceries. Walmart boosted its outlook for the year as the largest U.S. retailer continued to benefit from consumers' focus on necessities like groceries over items like televisions. The discounter also beat Wall Street's expectations on the bottom and top lines, as revenue jumped nearly 8% for the post-holiday quarter. E-commerce sales in the US jumped 27%. Data on Monday showed the US New York Empire State Manufacturing Index, a gauge of manufacturing activity in New York State on current business conditions, dropped to a 4-month low of negative 31.8 in May, weaker than expected, a reading of negative 3.7, raising concerns over a slowing U.S. economy. Economic data on Tuesday showed that U.S. retail sales came in at plus 0.4% month over month in April, weaker than the expectation of plus 0.8% month over month, pointing to consumer spending pullback. At the same time, U.S. core retail sales stood at plus 0.4% month over month in April, in line with expectations. Also, U.S. April industrial production rose 0.5% month over month, stronger than expectations of negative 0.1% month over month. Also on Thursday, the U.S. Labor Department report showed Claims for state unemployment benefits fell 22,000 to a seasonally adjusted 242,000 last week, stronger than expectations of 254,000 claims. Now for some bits and pieces. Gold isn't the only metal benefiting from economic uncertainty and bank turmoil. After dropping below $19 per ounce in September 2022, silver is back above $25 an ounce. Demand for gold and physical silver shows overall investor concern over the state of the economy, but silver often outperforms gold when it rallies. Silver prices just climbed to their highest in a year, and some analysts believe there's room for the metal to hit $50 per ounce if gold's bullish trend continues. Gold correlates little with the global money supply and has fewer industrial uses than silver. Global silver demand grew about 18% last year, with the industrial market posting a record of 556.5 million ounces, according to the Silver Institute. The World Silver Survey expects another silver supply deficit of 142.1 million ounces this year. In other words, we could have fewer inventories by the end of 2023, and now could be a great time to enter the silver market. Global gas supply is expected to remain tight for the rest of 2023, as new volumes of liquefied natural gas are unlikely to be enough to offset further reductions in Russia's pipeline gas deliveries to Europe, according to the International Energy Agency's latest quarterly gas market report. Favorable weather conditions and timely policy actions eased the pressure on the European and global gas markets at the beginning of this year. While this provides grounds for optimism on gas supply security, major uncertainties still remain. The level of Russian pipeline gas supplies is a big question mark. Other risk factors include unusual weather such as a very hot summer or cold winter. China is expected to gradually recover its appetite for LNG as well, although imports are set to remain below their 2021 levels as the country continues its reopening following a long period of COVID restrictions. Notably, the United States is expected to become the world's largest exporter of LNG this year, accounting for over half of the global supply increase. Electricity demand in the European Union fell by 3% in 2022, the only major electricity consuming region to experience such a significant decline. While the mild weather was a factor in the overall decline in electricity demand across the European Union, the hotter summer weather partially offset this, especially in southern Europe, as heat waves gripped the region, prompting households and offices to turn on their air conditioners to keep cool. France, Italy, and Spain saw prolonged periods of record temperatures. Soaring wholesale electricity prices in 2022 meant that the cost of electricity for consumers rose substantially towards the end of the year. Many energy-intensive industries, such as chemicals, aluminum, and steel production, further reduced their output in the second half of 2022. Domestic food price inflation remains high around the world. Information from the latest month between January 2023 and April 2023 for what food price inflation data is available shows high inflation in almost all low and middle income countries, with inflation levels greater than 5% in 64.7% of low income countries and 83.7% of lower to middle income countries and 89% of upper middle income countries, and many experiencing double-digit inflation in food. In addition, 81.8% of high-income countries are expected high food price inflation as well. The most affected countries are in Africa, North America, Latin America, South Asia, Europe, and Central Asia. Following through on my investing thesis of economic opportunity being where there is a young and growing population, this chart illustrates how India's working age population is growing, while China's and the United States' working age population has decreased. Correspondingly, Indian GDP growth has been steady, higher than the US consistently, and recently started to beat China's GDP growth. Of course, demographic trends may not always indicate future economic prosperity. A variety of factors may influence a country's overall wealth, including natural resource availability, macroeconomic policy, and geopolitical strife. China's population growth, already slowing, will nearly grind to a halt by 2026 amid falling births and steady rise in mortality. The age composition of China's population will change dramatically over the next 10 years. This, combined with a shrinkage in China's rural labor supply, is likely to have a negative impact on GDP. Finally, turning to next week, we have ongoing Q1 reporting. Companies reporting next week. On Tuesday, we have Lowe's, Palo Alto, Toll Brothers for the US home building. On Wednesday, we have NVIDIA, and starting with the Canadian financials, we have BMO and Bank of Nova Scotia. On Thursday, we have Costco and Royal Bank, TD, and CIBC banks. Hewlett Packard and Best Buy for a read on US retail. The economic events next week. On Tuesday, we have the Canadian Industrial Product Price Index, IPPI, US Manufacturing Purchasing Managers Index. On Wednesday, we have US oil inventories and we have US Central Bank Index. Thursday is US Personal Consumption Expenditures PCE Index for an inflation read. And we have US GDP quarter over quarter to see if they're in a recession yet. We also have US initial jobless claims. And on Friday, we have the US PCE price index for April, which is the US Fed's favorite inflation index. That concludes my thoughts for the week. If you have any requests on what you would like me to cover in future videos, please put that into the comment section. If you'd like to get in touch, please reach out on any of these social media channels, and may you have a profitable day.